Hi, and welcome to another edition of Ask Spurrell CPA. Today we're talking about Notice to Reader financial statements, or NTR financial statements. And I have Yahweh here with me again. Thanks for joining me on the video.
Of course.
Yahweh. So tell me about your Yahweh. How long you been here again?
I've been here for 2 years.
Yeah, 2 years, and you're getting started with the CPA program in January.
Yes, starting in January 26th, I'll be in the program. PEP.
Excited, scared? Both?
Both. I don't know what to expect.
It's like a driver's test. You just take it over and over until you pass. So,
right.
So the quote is, Warren Buffett says, "Accounting is the language of business." So accounting is the language of business, and I think if Warren Buffett's willing to say that, I think he's a pretty smart guy. Maybe we should listen to him. So, and the statistic that we have, 29% of entrepreneurs who fail, they report running out of cash is the problem. So they generally just don't know their numbers. So the story that comes to mind is business owners, they come in to see us and they don't have any numbers, or their numbers are inaccurate, or they don't know how to read the numbers. So, and pretty much all three are just as bad, really. So these entrepreneurs, what should they be asking, Yahweh?
Well, first of all, they need to ask, what are the Notice to Reader or NTR financial statements?
So the Notice to Reader or NTR financial statements, these are the annual financial statements of the business. So generally you're going to have a income statement, statement of returned earnings, and a balance sheet. And the formal annual statements, so for the whole fiscal year of the business, of what happened in terms of profit and loss, what's the assets and liabilities of the corporation, and what are the earnings that have been saved in the corporation over time.
Right. So what is the accountant's professional obligation when it comes to Notice to Reader financial statements?
So the accountant's obligation, a CPA's obligation, when it comes to Notice to Reader financial statements, they're different for different types of financial statements. But when it comes to NTR financial statements, the CPA is required to make sure that the numbers are arithmetically correct. So the balance sheet balances, the income statement, it actually is calculated correctly, and that the numbers are plausible. So again, the numbers are arithmetically correct and the numbers are plausible.
Awesome. Well, can you give an example of how that differs from reviewed or audited financial statements?
Yeah, well, we'll start with reviewed financial statements. So reviewed financial statements are a little bit different. So we have to go beyond, just determining that the numbers are arithmetically correct and that they're plausible. Whereas in reviewed financial statements, we have to perform analysis to ensure that the financial statements are reasonable. Have we calculated some ratios? Have we calculated versus what happens in the prior year? So we're going a step beyond, in just making sure it's arithmetically correct and believable, essentially. And now we're testing using analysis to make sure that the numbers are reasonable in reviewed financial statements. Whereas on the other end of the spectrum, we have audited financial statements. So we start here with Notice to Reader, making sure that they're plausible. In the middle, we have reviewed, making sure the numbers, we've done some analysis to determine they're reasonable. And audited, we're doing a lot of confirmation techniques to confirm that the balances are correct, such as, confirming with the bank that is the number, sending out AR confirmation forms to the receivables to make sure that they are in fact outstanding and they're going to be paid. So we go from, believable to tested as reasonable to confirmed in terms of audited.
Well, given that, what would be the advantage to do NTR financial statements?
Cost is the main advantage. It's much cheaper for a small business owner to do Notice to Reader financial statements as opposed to audited financial statements. And the cost for audited financial statements have risen, pretty dramatically in the last 20 years, where audited, reviewed or audited was more of the standard, and now the standard is creeping up that Notice to Reader is kind of the standard for most owner-managed businesses, for most small businesses, most private companies. It's Notice to Reader, Notice to Reader, Notice to Reader. Where reviewed and audited are more for big companies or not-for-profits these days.
Right. Well, besides costs, are there any other advantages to an NTR financial statement?
Some of the advantages is that the accountant is, the accountant's the independence concerns. So the accountant can actually be more involved. So when you're doing reviewed or audited financial statements, the accountant has to maintain a certain level of independence because in all practicality, they work for a third party. You know, as an auditor, you're working for the bank to make sure the financial statements of the business are reported correctly. But when it comes to notice to reader financial statements, you know, the independence requirements aren't quite as high. So it allows the accountant to get more involved in terms of providing advice to the business owner.
Okay. Well, given that there is more due diligence on reviewed and audited financial statements, do you think that the additional costs would benefit the business owner in the long run then?
I don't think so. I think for most small businesses, there are better things for them to spend their money on in terms of reviewed or audited financial statements. And in terms of, you know, if you really wanted to invest in your accounting, you know, you should be more concerned about, you know, developing the internal reporting requirements of your business. You can only get to the year-end financial statements to a certain level of competency. But at the end of the day, most financial decisions can't wait till year end. You know, we have to decide, can we hire people? Do we have to lay people off? Can we afford to buy new equipment? You know, we got to make those decisions during the year. So let's invest, rather than investing to make the year-end financial statements a greater degree of perfection, let's get some real reliable numbers flowing through the business during the year that we can make good, reliable decisions. I think that would be the better spend for most small business owners, rather than investing in an unnecessary year-end preparation procedure. You know, NTR is good enough. If you know, we have additional dollars to go further, let's make our internal reporting requirements stronger.
Okay. Well, are there any limitations with annual financial statements in general?
Yeah, it's just that they are annual financial statements. And given the tax reporting deadlines, I mean, your year end is due 6 months after the last day in your fiscal year. So if you have a December 31st fiscal year, that year end is actually due, your corporate tax return, it's due at the end of June. So now when we're meeting with a client, you know, potentially we could be meeting in June on last year's numbers. Some of those numbers took, you know, from January 1st, 2018 to December 31st, 2018. And now we're meeting with them in June of 2019. Some of those numbers date all the way back to January. Like, they're 18 months old. So, you know, we have numbers in front of us, although we can, you know, be accurate and you know, be free of any material misstatements. They're still 18 months old. The company could have fallen off a cliff, or it could have, you know, gone to the moon in the time that the year end happens, and we're meeting on the year end numbers. So they are just that, they're year end numbers, but they're not necessarily up to date numbers.
That's right. Well, where do you think business owners should spend their accounting dollars instead of doing reviews or audits?
Yeah, so I think they should be spending it in, you know, increasing that interim reporting standards. So what do we have in between the year ends? What's our reporting standards? How can we get reliable income statements, balance sheet, cash flow statements throughout the year, so we can make business decisions rather than, you know, wasting a whole lot of money in doing more than what's necessary on the annual end.
Right. Well, can you explain how independence requirements can make it difficult to give advice throughout the year?
Yeah, so one of the things that you do with reviews and audits is you're analyzing the controls that are put in place in the company. So when you're analyzing the controls that you're putting in place in the company, you can't be the one putting the controls into place in the company. So you're charging the client to put in the interim controls. So what's the reporting requirements leading up to the year end? As opposed to, you know, being the accountant, you could actually help them implement those processes and controls to get reliable interim figures. So it really limits what you can do for the client and getting them the reliable interim figures when you're the one supposed to be objective from the outside, just to analyze the numbers and the controls that were in place to provide those numbers.
Right. Well, given you're a CPA, are notice to reader financial statements from non-CPAs reliable?
It's the flip of a coin. So sometimes they're reliable and sometimes they're not, and sometimes a client might have had them be reliable for years, and then all of a sudden they have a new transaction and it's no longer reliable, and it's the old thing, the client doesn't know what they don't know. Just this week we had a new client come in and take a look at his financials, and there's never once been any salary or dividends paid to anybody ever in the company. I don't know how the guy was, but yet the guy is making a living and taking money out of the company. So we know for sure they're wrong, and they've been relying on them and filing tax returns on them and making business decisions on them, and they're wrong. It's kind of like, you want to hire an electrician to rewire your house, and you hire the guy from Kijiji who, is not a journeyman electrician. That house might burn down. So I'm not sure trusting your year-end numbers in a business that's your livelihood. This is not a side business, but this business is your livelihood. Trusting it to a non-CPA, that's not a risk I think most business owners should be taking. Yeah.
Not at all. What are some of the things that you do when completing NTRs to go above and beyond the required plausibility test to ensure that the records are reliable?
Yeah, a couple of things that I like to do is we like to get the bank statements. So we're actually looking at the bank statements, even though the numbers are arithmetically correct, and we can verify the balance sheet balances, and we've added and subtracted the income and expenses on the income statement. We actually want to match that to the bank statements. We're usually looking at the AR listing to make sure that in fact it is reasonable. We're doing a bit of reasonability testing. So we're looking at that summary of aged receivables, making sure that's good. Often we'll get a number of documents to verify that the assets and liabilities are actually the balances. Usually you're just getting the source documents from the client and taking it at face value. So skipping the step of going straight to the bank, which is a little bit unnecessary. Like if the client's telling you the truth, it's going to come in truthfully, so they're very capable of getting the statements themselves. We do that. We also go through the exercise of actually importing the general ledger into the year-end software, because then we can actually drill through the transactions, we can reclassify if necessary, see if there's any mistakes at a more granular level. So I think our idea is to get the reliable information, to use our professional judgment to give as reliable information as possible for a price point that's reliable for businesses too. So there's no point of doing checklists that don't benefit the client. We've got to have it clear that there's likely to be a misstatement here, so let's spend some time here, but let's not do anything over and above.
Awesome.
So I think that's what we have for today. So again, thanks guys for watching. If you have any questions, feel free to leave any comments below, and we'll answer your questions in any future videos. Thanks very much.